So let's talk about e.l.f. What the heck happened here is a great buying opportunity, okay? Here's what happened, okay? Ulta Beauty crashed today. The stock went down over 15 percentage points. Now, did Ulta Beauty report earnings? No, they didn't. But there was a conference today, JP Morgan conference, okay? And what management at Ulta said, they said, we have seen a slowdown in the total category. We came into the year, and we talked about this on our earnings call for a few weeks ago, expecting the category to moderate. It has, as I said, several years of strong growth. We did not anticipate it would continue at that rate that it's been growing. He said Ulta expected sales to grow in the mid-single digits for the year, but Kimball added that the slowdown has been, quote, a bit earlier and a bit bigger than we thought. That's a double negative there, okay? No bueno, no bueno, no bueno. He said that the trend has cut across price points in different beauty categories, but has been a bit more significant in prestige makeup and hair care. That's scary, right? Scary, scary. That's a problem, right? If you're talking about your business is seeing a bigger and much more pronounced, let's call it deceleration of your business, that's no bueno, okay? Now, this is an issue for e.l.f. indirectly because e.l.f. has a big presence in Ulta Beauty, right? If you go into any Ulta store across the United States of America, you're going to see a very large e.l.f. section in your Ulta Beauty, right? Now, this leads into, are the Fed lags catching up with the consumer, right? Because here's the deal. We knew rate hikes happened 22, 23. Now we're in 2024. And maybe these Fed lags are really starting to catch up. When you think about, right, Nike's numbers, Lululemon's numbers, Ulta's numbers, they're talking about the guidance and kind of some worrisome things in regards to that business, right? You see what's going on with Tesla. You heard what happened with Darden Restaurants and how bad their numbers and guidance was, right? You go business by business, and we're starting to get into some scary spots of like, man, maybe these Fed lags are really catching up to the consumer. Now, with that being said, for e.l.f. specific, right, a consumer pullback helps e.l.f. It doesn't hurt e.l.f. It's one of the very few companies out there that you could say the consumer is being hurt. It actually helps e.l.f. And here's why, okay? Just because somebody might be tighter on money does not mean they stop buying makeup and skincare. It's not the way it works. People always, if you wear makeup, you're always going to wear makeup. You're not going to say, oh, I'm a little tight on money, I'm not going to wear makeup today. No, that's not the way it works, okay? Same thing with skincare. Those are like non-negotiables. And the reason e.l.f. benefits from this is because their products are so highly valued by consumers and because their price points are so cheap. Their products, I mean, you go on Amazon, you go on their top sellers, it's like, 4.5 stars, if not higher, on almost all their products. And the price points are insanely cheap. $9, $5, $4, $3, $2, $7. I mean, look at these price points. $6. I mean, this is a holy smokers ain't no jokers deal. It's almost as good as a one-day tax break, jailbreak sale, but not quite, right? $10, $6, $20, $3, $5. This is their products, right? $4, $12, $10, $6, $9, $10. So let's say, you're somebody that wears makeup and you're like, man, money's a little tight. Inflation's hurting me right now, whatever, right? So you're not going to buy the $30 primer that's a competitor of e.l.f. sells, but you will buy that $10 primer because you know what? That $10 primer is probably just as good as a $30 primer that you buy from some other company, if not better. And it's $10 instead of spending $30, $40, or $50, right? So that's what's going on there, in my opinion. In regards to e.l.f., here's some other stuff that makes me feel like demand is still insanely strong at e.l.f., okay? They did this collab last week with Liquid Death, random, I know. It went viral, people loved it, and people were complaining left and right because it sold out. How is it sold out in 25 minutes? Sold out already. How did it sell out so fast? Please restock. Sold out when it was in my cart. Please do another drop. It's sold out. So when is the restock, right? And that was actually a high price point for e.l.f. $34 is a high price point for e.l.f. Like, they don't usually go up to those price points. I showed you the price points for e.l.f. It's, obviously this was a different kind of kit type thing, but still, like, people thought it was expensive, and it's still sold out way before anybody anticipated. So demand for e.l.f. still looks insanely strong. Look at their last quarter. Look at their guide. Look at stuff like this. They could be bucking the whole trend in this situation, right? Now, I will say, in regards to ELF, is a stock a buy? Yeah, every major dip's a buy in ELF, right? You think about the best, most well-run companies over the past 5 years, and most impressive companies. You think about NVIDIA, you think about AMD, you think about Celsius in the drink category, you think about Texas Roadhouse in the restaurant category, you think about Meta, you think about Amazon. In regards to all those stocks, every time you get a major dip, they're a buy. Same exact thing with ELF. It's a huge buy the dip opportunity. This is Alta's commentary being negative, and it is what it is. But at the end of the day, until I get numbers out of ELF that shows some sort of massive deceleration of growth, that's a pretty exciting story. And by the way, ELF is really starting to expand international in 24 and 25 as well. So that's a whole new growth category. You think about how much they're growing just in the United States, and then you think about, growth international, like, oh my gosh. So in regards to ELF, it's beautiful. Okay. Next up here, let's speak about Fubo. It's a $1.50 stock. I want to give an update on this. Then we'll talk about Honest and Win and where those stocks are going. Okay. So Fubo. I appreciate Shaheen. He's got this channel, and he covers just Fubo stock, right? It's a really small channel, and I think he does a great job covering Fubo overall. But there was a new interview with David Gandler, and I got a chance to watch his video last night. And it was a really hard interview to end up finding. It was on some podcast. It was a weird thing, but Gandler I don't think he necessarily gave anything that was earth-shaking as far as any news in relation to that. But with that being said, we got a really fascinating situation here, right? Where I think Fubo could skyrocket in the short term. And the reason being is if you look at their quarterly kind of cadence with their numbers, right? September and December are usually huge loss quarters for the company. And the reason usually is they spend a fortune on marketing during that time because they're trying to attract specifically football watchers. And so they spend a ton on marketing pretty much, August through, I would say, November, right? Now, what happens after that is you can see a huge, basically, improvement in their profitability. For instance, last year, right, they went in that December 2022 quarter, they lost $151 million. Then by March 2023 quarter, they cut that loss all the way down to $83 million, right? So here we are, they took their big loss quarters, they had their big loss quarters, $83 million and $70 million, right? And then where's March at? Maybe we're at a $40 million loss, $50 million loss, something like that, right? That's where you start to talk about, we're getting closer and closer to profitability. And where does that put the June quarter then? Because June quarter last year, they lost $50 million. Does that put June quarter at a loss of $30 million, right? That's when people can start to sniff out about, this company's going to get to break evens in the next 1 to 2 years. And then they can focus on profitability from there and growing that net income substantially over the coming years, right? So I look at this and I like this trend. And I'm telling you, if this happens, this is going to be massive for the stock price. If they could only take a $40 to $50 million loss in the March quarter, right? A lot of people are going to get very, very excited about Fubo. And then if they can cut that in the following quarter down to a $20 to $30 million loss, oh my gosh, it's off to the races at that point in time, right? Because then big loss in September quarter, December quarter, but the big losses are maybe $60 million versus 83 and 70, right? And then you start to sniff out, could we be break even come March the following year and maybe even profitable in June the following year at that point in time, okay? So here's the deal with Fubo's stock price, okay? There's only one, in 2 years from now, Fubo's either going to be, I would say, $5 to $15 a share. It's going to be $0 in 24 months from now, okay? I'm much more on the side. Obviously, I wouldn't be investing in this stock if I thought it was going to be zero. I think there's a much higher probability this is 3x to 10x in the next 24 months, okay? How do they get there? How does that happen? One, they get profitable, and the stock would absolutely, because right now, you're priced at $1 something. You're priced for bankruptcy. Let's just call it what it is, right? You don't get to $1 something a share unless you're being priced for bankruptcy. So if the company comes in and gets profitable, 3x to 10x is easy. That's easy peasy, okay? If they do that in the next 24 months. Another way they get there is if rates drop way down, right? Because then that would make the environment for Fubo to raise money, take out debt, those sorts of things much cheaper, which would be seen as very favorable to a company like Fubo. The third way they could do that is if they win that lawsuit, right? And the fourth way they could do that, if the Tom Lee situation plays out and small caps go rolling in this back half of the year, right? Tom Lee was predicting 50% rise for small caps. Small caps really haven't done much of anything so far this year. If Tom Lee's correct and small caps do go on a huge run this year, Fubo's Fubo's skyrocketing in that sort of situation. Like you'll see Fubo roll up like 300 to 500% in months. I'm not talking years, I'm talking months, okay? That would happen very quickly if that Tom Lee scenario plays out. Now, what are the ways Fubo stays at $1, or let's say goes to $2 in the next 2 years, right? Never get profitable, right? And is that looking really, that realistic? I don't think so. And I think the lawsuit situation, it's more than just trying to win that. It's more pushback, in my opinion, on those big players that own the content to be like chill in terms of, let's be a little more friendly in regards to rates. Because if you don't, then we're going to tell the government about you, right? And you're going to run into a whole lot of situations in regards to that, right? And we know the FTC, or not the FTC, we know the government in general, the DOJ is after a lot of these guys. And for them to go after Disney and some of these other guys wouldn't be crazy. 2, they would have to burn through all their cash, but they still have substantial amounts of cash. It's ridiculous on that balance sheet. So they would have to burn through all that too. And 3, they wouldn't be, if they couldn't raise any money, no one would loan them any money. That's how the stock would go to zero. So I think there's a much higher probability of this kind of 3x to 10x over the next 2 years than this situation. This is a possibility. We can call it like a 20 to 25% chance here. And I would say there's probably about a 70% chance of this, and I would say there's a super low probability, like a 5 to 10% chance that the stock is still in the dollar something range 2 years from now. Like that's the lowest probability. This is by far the highest probability in regards to Fubo. This is the second biggest probability, and the little teeny probability is this company's around where it's at right now, which is not very realistic. So yeah, that's why I play a stock like Fubo. And, kids, you might say, why even mess around with a stock like that with any portion of money, right? Where else am I going to get that potential ROI? I'm not, right? Meta's not going to give me that. Amazon's not going to give me that. Those are my biggest investments. I love those companies. Tesla's not going to give me that. I love Tesla. I think Tesla's a buy here, right? But with that being said, there's no stock in the market that's giving me a 3x to 10x opportunity in the next 3 years, or 2 years, the next 24 months. You're just not finding that out there, right? I love Elf. Elf's not even giving me that opportunity in the next 24 months. And so there's very few of those opportunities. And so for me to risk a portion of my capital, right, small amount relative to net worth, super small percent compared to total net worth, right, but also a small percent in terms of portfolio, right? Because you look at what I have invested in Fubo, it's such a small number compared to like what I have invested in Meta and Amazon and Tesla and Elf and these sorts of companies, right, Palantir. And that's because it's a lot more dangerous. But if I'm right on this, if that is that 3x, 10x opportunity that I think it is in the next 2 years, that small amount of money becomes a gargantuan amount of money. If I have 50K there, that 50K goes into a $250,000 or $500,000, right? In a pretty short amount of time. And then it's like, if I'm totally wrong and that doomsday scenario plays out and we go to zero on this, then I lose 50K. It's not the end of the world, right? But I could tell you 50K into 250, 500, pretty darn impactful, right? That's substantial position sizing at that point in time. That's why I'm willing to take a risk on a stock like this with a smaller amount of money, okay? And by the way, a lot of times when I do one of these type of stocks and it's a smaller amount of money, usually turns out pretty good. If I go too crazy with it, then it usually turns bad, okay? But if it's a smaller amount of money, Elf was a smaller amount of money, right? Elf was a $7,000-something investment, and look where that stock is today. I mean, it's like $160-something thousand I have in that, and it was like $7,000-something I invested into it, right? Tesla was a very small investment. It was like a $30-something thousand investment, I believe. 30 or 40, something like that. I can't remember. It was a small number, and it grew into a big stock. So I don't know. We'll see what happens with Fubo. I'm willing to take that risk. I don't think everybody should, but it's my thing, and we'll see. Hopefully in 2 years, Fubo's a $10, $15 stock, and I'm sitting pretty. We'll see. Next one up here, Big Short, Steve Eisman. Let's get into where his perspectives
the Central Bank's Market Impact, Steve Eisman, Senior Portfolio Manager at Neuberger Berman. And we've had you on enough that I'm always a little bit hesitant to try to ask you for big picture, top-down analysis, because a lot of times you don't really want to go there.
I actually have an opinion on this one.
Good.
Ooh.
You have an opinion on this, but I'll just start by saying we're in
right.
kind of an interesting environment where we're definitely worried that the economy, for Fed reasons and for Fed cut reasons, we're worried that the economy is staying strong and that inflation.
I think it's more than staying strong. I think there's been a reacceleration.
But we're also worried that there's going to be a recession because the Fed is going to have to engender one.
Stagflation.
So we're worried about the economy's too strong and there might be a recession. So
everybody's hoping for a little bear's porridge.
Exactly right. Something just right because we're worried. And has that ever happened? Can we really orchestrate that?
Yeah, we have it right now. Everybody should just relax.
So is that your view right now?
My view is I feel that ever since Greenspan was in charge of the Fed has always been extremely insensitive to its own impact on markets. And, you know, when Powell said, I think it was last week, it feels like an eternity ago, that financial conditions are tight, I was like, what planet are you on? So, I mean, my view is the economy's fine. There should be, I personally think there should be no Fed cuts this year. And, you know, the market will do whatever the market does, but the economy's fine. Why would you cut? You know, my actual fear is that if the Fed were actually to cut rates, the market goes into it becomes, I guess, bubblicious. And then we have a real problem. So, you know, things are good. The Fed should do nothing and wait for data to get weak. Because there's no weak data.
We still argue about, do you look at rates in absolute terms or do you look at them as,
you know, that debate bores me.
But in absolute terms,
really
they're not. In absolute terms, they don't seem high, but they're up 500 basis points.
So and has anything bad happened? Nothing bad.
No, that's
happened.
what I mean.
So,
I remember 7% and 8%, and businesses did just fine.
So the economy is good. I actually think, like I said, it's re-accelerated somewhat. Why would you? On what basis would you cut
Some
rates?
people think that the shock of 500 basis points is dislocated.
Yeah, well, they've been talking about that shock for the last 2 years, and the economy stays fine.
So what's causing the Fed to talk about 6 rate cuts 6 months ago?
My personal opinion is I think Powell is deep down is just a dove. He's always been a dove. Raising rates was out of character for him. He had to do it, and he wants to cut rates. But I at this point, you know, not that anybody ever calls me, but you know, I would just do nothing. Why would you do something when the economy is fine?
You don't think we need to raise?
No, I don't. But actually, my fear is that if they cut, that eventually we'll actually have to raise. That would be the worst possible thing that could possibly happen. So, you know, one of the things I've learned as a portfolio manager is maybe the hardest thing to do as a PM is to do nothing, because it's so easy to actually do something. And it's the same thing with the Fed. It's so easy to do something. They could cut whenever they want to cut. The hardest thing to do is just to sit back and say, okay, everything's fine. Let's just sit and wait. And if things get a little weak, then we can cut.
You don't think...
Oh, man. This reminds me of I put this really in-depth video together yesterday for the private group members. If it was a private stock group members watching this right now, you're going to know this video. But I put this video together yesterday for my private group and went very into detail on over trading in the market, making too many moves. And you heard what Steve Eisman said just there, right? A very veteran individual in the market. He says the hardest thing to do is to just not do anything. Now, what's very important about that, some gems here for you, is in regards to yourself, you watching this video right now, the hardest thing to do many times is not do anything. But many times it's the best thing you can do. Don't feel like you got to sell this stock and position over here into this one. I'm going to sell this stock and I'm going to position over there. Like if it's a really thought through decision that you thought about for weeks or a month or whatever, okay, fair play, right? But if it's some rash decision, like you feel like you just need to do something, likely it's your brain tricking you. A lot of times it's best to not, you don't have to do anything, okay? I've been considering selling Texas Roadhouse stock for like over a month now, I think at this point in time, right? And maybe I do that at some point in time, but it's like a long consideration process. But many times the best thing you can do is don't do anything, okay? And it's difficult. People don't understand how difficult it is until you get in it, right? And then, you know, you feel like you got to be productive. You feel like you got to make a move out there. Many times it just doesn't make sense.
The bubblicious. Are we pre-bubblicious yet? I mean, we're getting it.
I mean, look, the market is, but the fundamentals are really good. You know, one thing I always think about is, you know, 1999, 2000, when the market definitely was in a bubble. But what killed the bubble was not that it was a bubble. What killed the bubble was that the Fed raised rates a lot and put the economy into recession.
Yeah.
It was the recession that killed the bubble, not that
Small
it was just
recession.
So what do you think is driving this economy, though? Is it new productivity gains that somehow AI is coming? That's
I
getting
mean,
really
I think
exciting? What
the
is
two
it?
big things that are
Just
happening
a lot
right
of
now.
liquidity? What's the
No, I don't think it's the liquidity per se. I think it's real fundamentals that there's real AI, there's real investing, and there's tremendous amount of money being spent on infrastructure, and there's still a shortage of jobs, so the consumer is fine. It's a nice, it is little bear's porridge in a way. So why would you spoil it by raising rates, by lowering rates?
Just going back to like 2000, like the idea of a bubblicious situation at that point. You said it was the Fed raising rates that made it. I mean, the Fed raised rates and then made business models where you were making no profits.
Right, but today, the companies that people talk about are real companies that have real revenue, that have real earnings. I mean, look, NVIDIA's earnings have tripled.
I'm just saying that it wasn't necessarily the Fed just raising rates. The Fed raised rates. And
I'm not feeling Becky's sweater situation here. Like, that's something you could rock in maybe like December, but I feel like only December.
No, but then the economy actually went into recession and the speculation went out of the
Can I
market.
ask a question that may seem political? We're in an election year.
Yes.
And depending on the political channel you watch, you might be told that the economy is terrible and that folks are spending, inflation has run away,
Right.
costs of everything are up, everything is, the sky's falling.
Right.
And then I'm hearing you, as someone who's in the markets, say the economy is great and that this is actually like a Goldilocks
Please
moment.
don't say that word Goldilocks. It's very sensitive.
Whatever you want to call it.
Larry Kudlow used to talk about that. He used to drive me nuts.
Whatever you think this sort of moment is, and I'm hoping that you can square the circle, if you will, of how these two ideas could exist, unless you just
Andrew
believe
wants
that
you to
one.
say the Biden economy is great and it's not getting credit. Is really where we head with
It doesn't
many
get,
guests.
but it's fair. It doesn't get credit. I mean, look, the unemployment is really low. Wages are still going up.
Wages are just finally going up. to
Right,
where
for the last
people-
few years.
They're below, people's spendable income is still below where it was when he took office.
That's
Average
fair,
weekly.
but
It's not fair, it's
the trend
just
is
true.
but the trend is up.
It has been.
And people still have savings. The only thing negative you could say is that there's been inflation, so some things are harder to buy and harder to buy.
Yeah, a little bit, 30%.
But okay, that's fair. But inflation is starting to come down, or at
It's
least
not
it's
coming
flattened out.
The rate of increase is coming down.
Right. Okay. But
we're
wages are
stuck
still
with
going up.
30%, we're
All
stuck
I can
with
tell you is
30%.
that
Otherwise, you're calling for deflation, which would be worse.
I'm not calling for it.
No, I'm
calling-
saying, but if
I'm fairly certain, if I had to guess, I believe Joe here is a Republican, and I believe the other guy is a Democrat. I mean, I don't know for sure. I just watch the show enough that I can usually figure out who's on what side, and I believe that's the situation.
Nobody wants that,
Right,
but the price increases are in, and for everything.
That's fair, but the only thing I would just say is that there's no sign that the economy
Becky's
is
hard to
weakening.
tell.
There are signs that
Becky
the
could go
economy
either
is
way.
getting
I don't know.
a little
If you're
stronger.
living
Becky.
on, if you're not lucky and you're not like us, you go to the grocery
Becky
store.
might
and
be
you're buying
independent,
less
for
than
all
you
I
did
know.
3 years ago.
Okay, maybe. But still, things
That's a problem.
are still pretty good
For
overall.
us, things are pretty good.
For most
Oh man, interesting chat and debate there. Okay, all right, guys. Hope you enjoyed today's video. I appreciate you joining me. Pinned comment down there will be if you want to follow me on IG, Instagram, and then the other pinned comment will be if you want to follow me on X, formerly known as Twitter. Okay, much love, guys. Appreciate you joining me, and have a great day.